Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Welcome back to Big Money Real Estate. I'm Elise Glink. Here's your daily update. Not too long ago, I got a question from a 20-something first-time investor about leveraging debt versus building equity in real estate. He asked whether I would recommend reaching a specific level of equity in a rental unit before purchasing another property. So here's what I'm thinking. When I look at debt versus equity, I'm always choosing, when it comes to investing in real estate, to get a bigger mortgage, especially when interest rates are historically low like they are now, on the investment properties I own with my husband and my friend, so that we could write off the expense of the interest against the income the property generates. So that's me. We purchased an investment condo, for example, with an interest-only loan. We put 20% down, plus we paid another chunk for upgrades. When we bought it from the blueprints, I can't even believe this, it might be even 7 to 10 years ago. It's hard to remember. It might be 10 years ago we bought it, and then 7 years ago we closed on it. We had an adjustable rate mortgage on that property, and we've managed to stay cash positive for basically the whole time up until this last rate, increase. Today, it's been tough to purchase investment property with less than 25 to 35% in cash. And once you own 4 residential properties, including your primary residence, you may find it difficult to get any sort of financing for an investment property through Freddie Mac or Fannie Mae, even though you used to be able to get up to 10 properties total. And today, that's just really hard to do. Building a portfolio of rental properties or other types of investment real estate means making connections with several commercial lenders who will be able to guide you on what kind of equity they want to see in order to provide financing. And you want to find somebody who really specializes in the kind of property you're buying. So if you're buying strip malls, find a strip mall lender. I just heard today from a guy who's at SunTrust. He just moved to SunTrust. And I asked him what he's looking for, and he said he's looking to provide financing 10 to 50 million. You go to him with a $5 million property loan, he's not going to be interested. He's looking at 10 to 50 million. So there's hyper-specialization going on as well. So some lenders are going to require that you put down 35% in cash for deals 2, 3, or 4, or any commercial. But by the time you own a half a dozen properties, particularly if each has a significant number of units, and by significant I mean usually more than 3 or 4, you may be able to refinance all of the properties together with a single loan. And there's pluses and minuses to that strategy, so you're going to want to think it through. Keep in mind that the amount of debt you carry on your investment properties must be repaid. This is not like you buy it and never pay it back. So the rental income that you have needs to be considered, right? And how stable those rents are. Your federal income tax situation, other details relating to the number of properties that you might want to buy in the future. In making your decision, this is all going to be key to making the decision, the smart decision about how much debt to carry relative to the equity over the long run. Because there are always going to be hard money lenders, also known as private money lenders, and we've had some of those interviews, who will be willing to do what would effectively be a zero down on these properties. That is really risky, and tread with caution. The best piece of advice I can offer is to not do all this on your own. So sit down with a bunch of different lenders so that they can walk you through the different scenarios that could affect this decision of how many properties to buy, where to buy them, how much debt to carry. You should definitely build a group of trusted advisors who will help you create your own real estate investment portfolio and the strategy behind it. Strategy is key for whatever you're going to be doing. And if you take the right steps and you continue to make this a central goal, I have no doubt you're going to get where you want to go. Thanks so much for the question, and thanks for watching this episode of Big Money Real Estate. Be sure to send me your real estate investing and personal finance questions. You can do that on Twitter or on Facebook or at questions@thinklink.com. And be sure to share this video with all of your friends who are your fellow investors as well. Until next time, I'm Elise Glink.